Ladies and gentlemen, good day and welcome to Talbros Automotive Components Limited Q2 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which is based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director of Talbros Automotive Components Limited. Thank you, and over to you, Mr. Talwar.
Yeah, thank you so much, and a very good afternoon to everybody, and a very warm welcome to our Q2 and an H1 FY24 earnings call. On the call today, I'm joined by Mr. Naveen Juneja, our Director on the board, and our Group CFO, as well as SGA, our IR firm from Mumbai. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has had a chance to look at it. Let me begin with the industry and the economy overview. The auto component industry has shown resilience and the will to succeed despite economic hardships, supply chain disruptions, technology upheavals, and even major global geopolitical scenarios like the ongoing war that's happening. Not just supplies short-term in China, but also powerful incentives offered by the Indian government has encouraged domestic manufacturing and has been industry's driving force. Along with that, India's automotive industry saw an exceptional growth of 21 million units in FY23, creating a robust demand for auto components. So far in H1 FY24, 11 million vehicle units have been sold with a growth of 9% YOY. Whereas in H1 of FY24, the total production of passenger vehicles, commercial vehicles, two-wheelers, three-wheelers was 14 million units, probably one of the highest ever. In FY23-24, the passenger vehicle segment is expected to remain on a positive side with a growth rate of 6 to 9% on a year-on-year basis. The commercial vehicle industry has also followed a similar path, and its overall industry volumes are projected to reach pre-pandemic high levels, even as growth is expected to remain at a modest level of 2 to 4% YOY. Also, we believe that H2 will be stronger for commercial vehicles, given the fact that there's an election year coming up next year as well. The growth is particularly strong in the passenger vehicle segment and expected to continue expanding in the coming years. The journey of PV vehicles of our country has just begun. Furthermore, the demand for commercial vehicles has been boosted by government initiatives through infra spend on capex on highway, roads, and ports. As a company that is strong in both these segments, Talbros stands to benefit from this trend and has ample opportunity of growth and expansion. Coming to the company's performance. First half of 24 has been a better period at Talbros Automotive. At a group level, including our joint ventures, the company achieved a revenue of 616 crores, which is a growth of 23% YOY for H1. During H1 FY24, two and three-wheelers contributed to about 21%. Passenger vehicles made up the largest share at 33%. Commercial vehicles at about 25%, and agri and off-road at about 11%. For H1 FY24, our exports 15% came from the gasket business, 55% came from the forging business, 17% came from the Maleri business, chassis, and 3% came from Talbros Marugurava. Following the order One back in FY23 and H1 of FY24, our overall growth trajectory is anticipated to continue in an upward direction. To reinforce our existing order book, we are actively striving to secure additional orders. Throughout the year, JV operations have demonstrated a resolute performance in their respective segments, particularly in the PV and the CV segments. We are committed to our vision of becoming a global leader as an auto component manufacturer. In the process, as we embrace and celebrate the milestone achieved, so far, we aspire to sustain our growth while advancing in the future, making relevant to the services we offer. Furthermore, we shall maintain our position as a diversified and a hedged auto component provider and implement a predetermined course of action to bolster our product portfolio through the introduction of new value-added items to capitalize on expanding our domestic and international market opportunities. The company's growth has been supported by innovation and business development, as well as capturing market share in our existing market and going to different territories worldwide. We are assured of achieving a group sales target of 2,200 crores by FY27, of which 35% export will be from export. This will come from the US, the UK, Europe, as well as Japan. To end with that, we are pleased with our strong financial results and optimistic about the future of the automotive industry. We remain committed to innovation, operational excellence, and delivering value to our customers and shareholders. With this, I request Mr. Naveen Juneja, our Group CFO, to update you on the financial performance. Thank you all.
Thank you, Anuj. Good afternoon and a warm welcome to all the participants. Let me begin with the financial overview. The total revenue for Q2 of FY24 stood at rupees 197 crores as against 162 crores, a growth of 21% on YOY basis. For H1 of FY24, our total revenue stood at rupees 382 crores as against 317 crores, a growth of 21% on YOY basis. EBITDA for Q2 FY24 stood at 31 crores as against 22 crores, a growth of 39% on YOY basis. And for H1 of FY24, EBITDA stood at 59 crores as against 43 crores, a growth of 37% YOY. EBITDA margin for Q2 of FY24 stood at 15.6%, and for H1 of FY24 stood at 15.3%. PAT for FY24 stood at 20 crores as against rupees 13 crores, a growth of 53% on YOY basis. And for H1 of FY24, the PAT stood at 37 crores as against 25 crores, a growth of 50% on YOY basis. The board of directors have declared an interim dividend of 20 paisa per equity share of face value of each of the company. In the gasket division, including nipple leakless Talbros, for Q2 of FY24, our standalone gaskets and heat shield sales was 130 crores as against 107 crores in Q2 of FY23, a growth of 22%. Total revenue of nipple leakless was rupees 26 crores in Q2 of FY24 as compared to 25 crores in Q2 of FY23, a growth of 3%. For H1 of FY24, our standalone gasket and heat shield sales was rupees 252 crores as against 212 crores in H1 of FY23, a growth of 18%. Total revenue of nipple leakless was rupees 49 crores in H1 of FY23 as compared to 48 crores in H1 of FY23, a growth of 3%. This segment saw a combined EBITDA of 27 crores in Q2 of FY24 versus 21 crores in Q2 of FY23, a growth of around 9%. And for H1 of FY24, this segment saw a combined EBITDA of 48 crores as against 39 crores, a growth of 23%. Now coming to our forging division. Revenue in Q2 of FY24 grew by 23% to rupees 68 crores as against 56 crores in Q2 of FY23. In H1 of FY24, revenue grew by 26% to 132 crores as against 105 crores in H1 of FY23. EBITDA in Q2 of FY24 grew by 55% to rupees 12 crores as against 8 crores in Q2 of FY23. In H1 of FY24, EBITDA grew by 62% to rupees 23 crores as against 14 crores in H1 of FY23. Now coming to Talbros Chassis Systems Private Limited, our JV. Revenues for Q2 of FY24 stood at 64 crores versus 55 crores in Q2 of FY23, reaching a growth of 17% on YOY basis. For H1 of FY24, revenues stood at 121 crores versus 100 crores, a growth of 21% on YOY basis. For Q2 of FY24, its EBITDA stood at 9 crores as against 6 crores in Q2 of FY23, a growth of 51% on YOY basis. For H1 of FY24, EBITDA stood at 16 crores as against 10 crores in H1 of FY23, a growth of 52% on YOY basis. Now coming to our third joint venture of Talbros Private Limited. Revenue stood at 33 crores in Q2 of FY24 versus rupees 20 crores in Q2 of FY23, reaching a growth of 68% on YOY basis. For H1 FY24, revenue stood at 63 crores as against 36 crores of H1 of FY23, a growth of 74% on YOY basis. For Q2 FY24, EBITDA stood at 1.6 crore as against 1 crore in Q2 FY23, a growth of 62%. For H1 of FY24, EBITDA stood at 4.5 crores as against 1.8 crores in H1 of FY23, a growth of 143% on YOY basis. Anticipating the future, we foresee a multitude of prospects that promise to foster continuous expansion with the automotive sector. Significant investments have been made in new technology, capacity expansion, product portfolio, diversification, customer base expansion, and market entry by the organization. Company is certain that these initiatives will position the organization to capitalize on forthcoming opportunities in the industry and foster long-term growth. This is all from our side, and I would now like to open the floor to question and answers. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A gentle reminder again, if you wish to ask a question, please press star and 1 on your touchtone telephone. The first question is from the line of Akash Mehta from Capaz Investments. Please go ahead.
Hi, sir. Good afternoon, and thanks for the opportunity. So my question was mainly on the new segment that we entered, the agri construction and off-road segment, and you've done a capex of about 400 crores for the same. So just want to understand how lucrative is this segment for us, and is it slow moving or is it expected to grow at a fast pace?
Your voice is not very clear. Not clear.
Yeah. So I was talking about the new segment that we entered into, the agri construction off-road segment.
Yeah.
So we've done a capex of about 400 crores for the same, right?
No. No, 400 is not 400.
Not for capital forging or the new agricultural segment.
No. The total capex on the standalone basis for the first 6 months is around 23 crores. Okay, out of which forging is around 17 crore. 16 crore, 17 crore only. Okay. Now it will
how lucrative is this segment for Talbros? Just want to understand. Is it a fast-moving segment or?
So, during the first 6 months, this segment we sold around. So my sale is around 30 crore plus 30 to 40 crores. We expect that this segment going forward should give a revenue of around 100 crore per annum in a couple of years.
It's a lucrative segment. It's a lucrative business. It's a business out of UK where they export it to and USA and Europe. So it's a strong growth business.
And on the margin front, how do we see the margins going in this segment?
Its EBITDA is around 18% plus.
18%. Okay. That's it from me. Thank you.
Thank you so much. Ladies and gentlemen, a gentle reminder, if you wish to ask a question, please press star and 1 on your touchtone telephone. The next question is from the line of Dipen Shah, who is an individual investor. Please go ahead.
Hello, am I audible?
Yeah, you are audible, sir.
Okay. I had just one question on the profitability of the subsidiaries. We understand and we see in the presentation that Marugo as well as Magneti, the relative profitability is slightly lower as compared to the forging business. So, in your opinion, over the next couple of years by FY27, what kind of EBITDA margin should we assume for Marugo as well as Marelli?
First, let me talk about Marugo. Please don't look at the last quarter. During the last quarter, the company has shifted its manufacturing facility from existing earlier in Malaysia. There were 2 plants. Now we have got a big facility in Bawal. During the shifting, we first of all extraordinary expenditure were incurred in shifting and installation of machines. Plus a lot of manpower, trained manpower was not shifted to Bawal, which is around 50 kilometers from the existing old facility. So they didn't turn out there. So we have to employ fresh manpower, which resulted in higher material costs, higher emissions, and low productivity.
Okay.
These are some extraordinary events for the company in the last quarter. I think by now, 80 to 85% problem have resolved. Trained manpower is there. Now we can see a much more improved next 2 quarters in this. This is one-off quarter. Please ignore this quarter for us. This is one-off because of the shifting thing. Now everything is 80% of the things are online, and I think this current quarter, you will see a much better EBITDA, and after that, it will be much better. In the next 27, the EBITDA of this business should be between 30 to 50%. Okay, number 1.
Yeah.
Marelli is a chassis business. It's a sheet metal business. We buy sheet metal. It's lot of, and raw material cost is 75-76% in this business. The business margins do not compare with forging where 55% is both are the gasket with the proprietary product. So going forward, this business can also give you EBITDA of between 14 to 15% next 2 years.
Okay.
Export is yet to pick up. My export is yet to pick up. The day 80% the margins are better, and I think in next 2 quarters you can see a little flavor of that improved EBITDA in this business also.
Okay. That's it. Thank you very much and all the very best to you.
Thank you.
Thank you very much. You can press star and 1 on your touchtone phone if you wish to ask a question. The next question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. Sir, my question is on the other expenses side, which is higher 6% sequentially. So if you can throw some light on that. And secondly, congratulations on the good set of numbers.
Thank you. First of all, regarding other expenses, The other expenses basically is higher on the forging side. There are two things happening there because since the export is going up and we saw some problem in the packing side, the packing was on the lower thickness side, the packing boxes. We increased for the higher weight because my component weight is going higher by higher. Now we have improved the packing, so we have incurred the additional cost about 50 lakhs in this process. So my packing has improved, so customer complaint which was there has been resolved. So in all the export packaging, we have improved the packing. Plus there are one-off expenses related to freight, which was partially related to first quarter, has been debited in this quarter. So this is one-off again. Okay, if you compare, please compare H2 23, H2 24. That will be better. And Q1 and don't compare Q1, Q2 in other expenses. This is some one-time expenses. That's all.
Okay, thank you, sir. And sir, another on the margin side. So like in this quarter also we deliver 15%. So we will be going to continue this trajectory, or we have any projection going forward?
Going forward, my margin should be above 15%. We are quite hopeful about that. Yeah, we should sustain it. Not 15.6 is one little higher in this quarter, but going forward between 15 to 15.5 it should be there.
Okay, great. And sir, if you can also guide us on the top line side.
For which year? Hello? For which year?
Coming years.
I think, to be honest, we should maintain a good double-digit growth rate even for H2.
Yeah.
And then we'll get back to you after.
Yeah. It should not be, because last year was very high, second six months. It should be better this year also. But overall, it should be around 18%. It should be there. Yeah, for the full year growth.
So, sir, for that, we have any good order, if you can explain to us that in the pipeline?
Yeah, we have orders in pipeline also. Some new business is being converted in this coming quarters also. It will be added to the top line. Plus, existing business growth should also be there. And in the future, we are in the process of compiling the order book, fresh order book, and it will be shared with the investor community shortly.
Okay, thank you so much.
Yeah.
Happy Diwali. Yeah.
Happy Diwali.
Thank you so much. Ladies and gentlemen, if you wish to ask a question, you can press star and one on your touchtone phone. The next question is from the line of Rajvi Shah from Bright Sec. Please go ahead.
Thank you for the opportunity. I just had one question. What has driven H1 FY24 revenue to grow by 21% year-on-year?
What is driven? I think it's a mixture of the current growth in the Indian market, our increased market share with customers, new products, new customers, same products, new territories, and like for example, the heat sheet line is growing, the forging business is growing in a massive way to the UK for the active and the operative business. EV component called the battery cradle for Tata Motors as an EV product line from Pune is growing. The biofuel hoses which are supplied to Marubu, that is growing. So a mixture of products, new business acquisitions, as I told you, is all leading to the growth.
Okay, that helps. Thank you.
Thank you.
Thank you so much. If you wish to ask a question, ladies and gentlemen, please press star and one on your phone. The next question is from the line of Ravi Shah from Concall Sec. Please go ahead.
Yeah, hi sir, am I audible?
Yeah.
Hello. Yeah, first of all, congratulations for a good set of numbers, sir. Second, so I had a few questions. We just spoke about EV, it's pertaining to EV only. So the revenue share in our presentation, we mentioned we plan to take it to 12%. It currently is at 2%. So so we are looking, what kind of capex we are looking over here, and what would be our capacity utilization after this capex? So a little comment on that.
Regarding the EV from 2 to 12%, the business is being under process of being awarded. The production is yet to start. In the case of our UP customer, we have won the business, I think decent business for the product to be launched from next year. So from next year, you will see a little traction in that business going forward. And because when the model will start, when the thing will start, it will grow. The order book is with us. For that, we have got the Maruti order of, whenever the EV Maruti, we have the single source for our suspension in that. So it will be launched in 25, so the business EV percentage will go up in that time. So regarding the capex capacity utilization, if we standard business of gas and heat sheet, it is around 90%. In my forging division, it is around 85%. And in majority mainly is again 80% plus. In my Talbros Margo, it is around 19%. In my joint venture of nickel necklace, it's around 75% capacity utilization.
Understood, sir. I have one more question, sir. So, what should be the key external and internal drivers that would lead to these sustainable PAT margins that we have?
I think basically being a hedge portfolio, supplying to different types of components, car makers, truck makers, off-roaders. At the same time, we export a lot, a constant watch on our cost controls, constant watch on our manpower costs, constant watch on localization, VAV. So it's a mixture of that, Also economies of scale, like in a forging business line or chassis, we're building higher revenue part numbers. So automatically that adds more direct value to the bottom line.
So the current margin can be assumed to be sustainable, or it can increase from your side?
The margin, sustainable margin is 15% plus is sustainable margin.
Understood, sir. Thank you for these detailed explanations, and all the best, and happy Diwali.
Thank you.
Thank you. A gentle reminder again, ladies and gentlemen, please press star and 1 on your phone to ask a question. The next question is from the line of Jia Shah. Please go ahead.
Hello, am I audible?
Yeah.
Okay. So we have mentioned to increase our presence to 22% approximately, by FY27 in export markets. So how do we plan on executing this? Like, are we planning on new geographies or volume, price realization?
Only export, what are you talking about, ma'am? Not very clear.
Okay.
No, what you are saying, what's the question? Please repeat that.
Okay, so what I'm trying to ask is that we are trying to increase our presence in the export market, right, to approximately 22%. So how are we planning to execute this?
We're looking to have our exports north of 25% in 2027. And how we're going to execute this, ma'am, is basically we are looking at new territories, we are looking at new areas, newer product lines, new customers, even a lot of customers in UK, USA and all wanting to buy from India with the whole China tariff situation. So it's the same plants that we have, better audit facilities, I would say, better quality systems.
And expanding our capacity in that also. Yeah. We have a lot of export orders in pipeline also at present. And we are in the process of closing more export orders, I think, in next 6 to 9 months. So it is visible. You can see light of that.
Okay.
Achieving that. We need to add equipment, machines. We are in the process of doing that.
It's nothing out of the ordinary. Very similar component that go in India also go by export. So nothing that you have to make a 360-degree change. No, nothing of that sort.
Of course, some part number there. We are capable of working both part numbers. Don't worry about that.
Okay. I have a second question. We have about 50% market share in the gasket business, which is great. So my question is that how do we see our market share further growing? Are we targeting new customers or new markets? Would you throw some light on this, please?
First of all, of course, you are doing a 50% plus, you are right. We are adding, first of all, more customers in that. A lot of new customers are giving new part development is coming to us. So there are new part numbers and more value addition part numbers. Number 2, heat sheet. Heat sheet is coming in a big way to us. Which is linked to the gasket business. Which is added in the gasket business. This is also coming to us in a big way. Last year we did as a whole around 40 crore of heat sheet business. In the first 6 months we already done 21 crore this year. So we are we are looking at great future in that also.
Okay, all right. That was helpful. Thank you, sir.
Thank you so much. The next question is from the line of Ruchi Gupta from Value Consultant. Please go ahead.
Yes. Hi, sir. Am I audible?
Yes, thank you.
Yes. Sir, so I understand our capex is funded majorly through internal accruals and some debt, right? So is it fine to say 20% would be through debt and debt? And could you quantify debt numbers and cost of debt for the same?
Yeah, ma'am, total debt is as a company is around 85 crores. Out of which around 5 crores is term loan, balance is working capital. Okay, the cost out of which around 40 crores in the form of packing credit, which at present is around 5.9%. Balance, majority, I think 40% out of it, except giving 5 crores, balance is in the form of WCTL, working capital loan, which is around 7.9% now with my improved rating. The rate has come down to 7.59 to 8%. This is my borrowing cost.
Okay, sir. Sir, I have one more question. Who are our top customers in the gasket and forgings business, and how much do the top 5 or top 10 contribute to these businesses?
Yeah, I'm just in the gasket and heat sheet business, my top customers are in the first 6 months. Tata Cummins, we did a sale of 41 crore. Bajaj Auto, we did a sale of 38 crore. BCV, we did a sale of 16 crore. Tata Motor, 15 crore. Hero Motocorp, 10 crores. GLR, 8 crore. John Deere, 8 crores. Maruti, 7 crores. And these are my gaskets and heat sheet. And the forging, my main top customers are BMW, 28 crores. JCB, 22 crores. Dana Italy export is 18 crores, JLR export is 14 crores, GKS export is 11 crores. These are my, but what are the other questions? This is my customer of gasket and forging. And what you said, anything else you said? Hello?
Yes, thank you, sir. Got my answer. Thank you for all detailed explanation. Thank you so much. Happy Diwali.
Happy Diwali.
Thank you so much. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Yash Kukreja from Equity Capital. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So my question is regarding the orders from the non-automotive segment. So, sir, how much this segment contributes as of now?
At present, it's very minimal, to be very fair to you. It's around 10 crores. Order book is there, 10 to 12 crores. At present, is this much. It's very minimal at present. Non-automotive.
Okay. So, sir, are we planning to expand into this?
Agri is the automotive again.
We consider agri, off-road or construction automotive basically.
Yeah.
And
as a industrial segment we are there.
Yeah.
In generator, some other industrial segment was stationary, etc. We are there. But if you must call it non-automotive.
Okay, got it. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ravi Shah from Concall Securities. Please go ahead.
Thanks for the opportunity again. So basically, we had received a big order during July period of 400 odd crores. After that, I mean, any new client addition we have done or anything on updates on those fronts?
We have already received some orders. We are in the process of compiling those data, and shortly we will release the order book. Very shortly.
Okay. Understood. Any names you can give me?
It's not stock, it's there. Okay.
Sorry?
The order is fresh orders are there. We are in the process of waiting some more order to close, and we will release this to the investor community shortly.
Understood, sir. So one more question I had was on the cash flow front. If I see receivables have jumped by 20 odd crores. Any reason for that?
Yeah, because you have seen for the first time that we are talking about JCB. We have started supplying to them. I think 22 crore sale has been done. Firstly, we have a depot there in UK. We have to stock for them. With the result, my debtor has little bit gone up, and I think this is one time. And now the inventory, they have intake has started, and it will be, I think, come down by the March. It should be under control because the number of days has not gone up. Number of days is still the same. But the figure
I understand.
Is also gone up.
Correct. So what kind of normal working capital cycle should we expect going forward? Like, I mean,
it depends on business to business. But in OE, my payment term is around 75 days. Okay, in export is around 130 days. It depends on customer. In Maruti, we do it 1 month. But standalone, we are not selling much to Maruti. In daily, we are selling to Maruti. Otherwise, 60 to 90 days payment terms are there. Indian OE, exports it generally takes around 100 to 130 days.
Understood. Because we made good profit growth, but it's not directly translating to cash flow, so I was a little concerned on that one. But thank you.
It will be. Because the margins are good, everything is built in that. In the costing is built, inventory holding cost, everything is built in that. Of course, I agree with that. I agree with you.
Thank you, sir, for your answer. All the best.
Thank you. As that was the last question for the day, I would like to hand the conference over to the management for the closing comments. Over to you, sir.
Yeah. Thank you so much for being a part of the call. We've had a good quarter, we've had a good year. We're very confident about our progress going forward, and we wish you all a very happy Diwali.
Thank you very much. On behalf of Talbros Automotive Components Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.